Is no restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends, welcome to a lazy Sunday afternoon update here on the price of Bitcoin. And as you can see, we are currently getting a nice little dump here to the downside, right? And now the question is, can we bounce? We've just been chopping here ever so slightly over the whole entire Saturday and early Sunday morning. We literally have just been chopping sideways here, and now finally on the Sunday, that's when we start getting volatility back in the market. And you can see where Bitcoin is trying to hold at the moment. It's trying its best to hold the point of control of this entire range from the low that it's formed over here. If you drag a fixed volume profile, this is where it's really trying to hold. The one thing that looks a little bit concerning about the level that Bitcoin is so desperately trying to hold over here, legends, is that it's not grabbing any liquidity. Okay, it fell here to the downside. One could argue that it's now had a successful swing failure, from the low, right? And now it's back testing the level. Okay. But the liquidity pool is at the bottom and the liquidity pool is at the top. Now the question is, right, it's now here, smack bang in the middle. Which one is it going to gun for? Is it going to find support here by the point of control and grab the liquidity here above? Or is it going to find weakness and continue the momentum here to the downside to round about the $80,000 zone? You can see that we also, during the entire weekend, we've had consistent bearish CVD building up. And those little green ticks that you see over there is bearish CVD after bearish CVD after all of these bearish CVD playing out, driving the price now here to the downside, where all the bearish CVD has now played out. But a little bit interesting is that between these two little pivots over here, we also formed again bearish CVD, okay? And now we're getting the drop here to the downside. Remember, the target is this low. So the bearish CVD now played out. But it is a little bit strange to find a bounce at a zone that has no liquidity, okay? There's a little bit of liquidity ever so slightly here to the downside, round about $81,543. We have a little bit of liquidity over here where we could potentially expect a little bounce back to the upside, but it looks like, legends, it looks like price wants to continue to the downside for the moment. Okay, we are getting momentum to the downside, and we are, even with the dump here to the downside, still forming bearish CVDs, showing weakness in the price at the moment. Right, legends, remember to smash up that like button. Let's do some technical analysis and identify the highest probable bouncing areas so that we can scrape those dollars from the market with good risk management and taking profits, getting in, getting out with profits in the bag. Right, legends, I still got my account running over here. I'm not in any trade at the moment, But as you guys can see, I have taken some trades. Which one do I open? I have taken some small little trades, okay? And out of the, I'm not counting the bottom one, but out from there, 1, 2, 3, 4, 5, 6, 7 trades that I've taken. I have won 5 and I have lost 2 with good risk management, but it's been absolutely small little scalp trades, entering with 1% of my capital. And right, legends, I'm waiting for that nice little trade during the week, so this is why I'm here. Okay, let's go and identify those high probable shorting areas. I was actually in a short, legends. I was actually in a short from this pivot. Okay, I was in a short from this pivot over here. And then I don't like to leave trades open over the weekend. And I think round about this zone over here, I closed the short and I relaxed for the weekend. Okay. Could have left my position protected and now benefited from the momentum here to the downside. It is what it is, right? It is what it is at the moment. But I am trading here on weeks. And if you'd like to come and join me, down in the description, select more. First link down in the description is where I've got weeks where you get that 50% cash back on the money that you deposit in your features account. And also an insane 25% discount on your trading fees. And then also, okay, let me just switch myself around over here. Okay, also, the more you trade, the more prizes you win, and the more money gets airdropped into your account. You stand a chance to win a Rolex or a MacBook Pro, right? M3. So you get rewarded for signing up, and you also keep on getting rewarded for trading. And I mean, the main commodity or equity, whatever you want to call it here, that I'm trading at the moment is Bitcoin, right? This is where I do most on, if not all of my day trading. Right, legends, let's say hi to the beautiful community. Let me put myself back to where I belong and go through some comments, and then we can start with a technical analysis and prepare for the week. HB, yo bro, welcome to the live stream. Frank, yo, Dewald and legends, good Sunday. Yes, Colin, welcome. Like YouTube, just tell us if it's going up or down. Well, for now it looks like the momentum is preferring downside. I do see some selling pressure kicking in here from a volume perspective. Okay, it looks like momentum could potentially still continue here to the downside. The only little bit of liquidity that we have is inside of this consolidation area, just below, right? There's a little bit of liquidity lying there, so I wouldn't be surprised if price swing failures that low, retests the point of control as resistance, and potentially continue to the downside where we have a massive liquidity pool lying over here. You can see over here, legends, when I open up the liquidity map, the CVD over here, right? This is that consolidation area that I've just highlighted. Can you guys see this little consolidation area? There's a weeny tiny little bit of liquidity lying over here. Okay, so you could get the bounce, right? Retest this area as resistance and continue the momentum to the downside where this little pocket of liquidity is lying around about the 81 to $80,000 area. Okay, so for now it looks like price wants to continue here to the downside. Any bounce at the moment should be treated with good risk management and aggressive profit taking. Right, so legends, what I want to do now is go mark out all the level, make sure that we have all the point of controls, the daily levels. I haven't done that yet, okay? Tomorrow morning, I need to make sure that I've got the weekly level marked out as well. So before I continue, hi, Dewald. Love the intro. Thank you so much. Tomas, welcome to the live stream. Elizabeth, always great to see you here. Talma, hi, Dewald. Thank you for the update. Absolute pleasure. Cosmo, magical Sunday to all. Yes, SGS. I came here to drink some milk and get some alpha. I just finished my milk. Right, SGS, welcome here to the live stream. Yo. Okay, I do see all the comments, legends. Let's dive into, do market maker institution use Elliot wave theory? I'm sure they use every single theory that is available in the market, right? That consolidation is good for a long at the moment. Yes, I'm also looking for that consolidation for a small little scalp trade back to the upside. Okay, we need to be aggressive with our profit taking. Okay, right, legends, let's dive into the technical analysis. Let me take the brushes out. Okay. Ooh. Now, first thing I want to do is let's take this out. Okay. We obviously, from this entire structure, we have an obvious resistant pocket above. Okay, that is where the liquidity is lying here above. It's this little bad boy above, right? Where we have that insane liquidity. It's basically above these highs, but I would imagine that price would grab that liquidity as well. And then a little bit further up, we also have this resistance pool over here. But now that price looks like it wants to continue to the downside, okay, I want to make sure that we've got our levels here at the bottom marked out for those potential bouncing areas. So the first thing I want to do is go onto the daily time frame. Okay, let's go and have a look at these candles. I want to switch on my daily levels. Right, let's go, legends. I have not done any technical analysis, and this is usually how I prepare for the week. Okay, so I'm doing it together with everyone over here. Right, so we do have a daily level. Let me switch on my magnet and snap it on. Right, we have a fresh daily level that formed at $81,000.85. It is slightly above that liquidity pool because that liquidity pool is lining up over here, right? Actually more below this low, right? So there's a chance that price could dip in here and find a little bit of upwards momentum. So definitely an area that I want to pay attention to, considering that there's a large amount of liquidity lying here as well. And then a little bit further down, right, we have a daily level untapped at $78,540. Okay, so that's basically the daily levels. I don't see anything else. Okay, that's good. Next thing I want to do is take my fixed range profile on yesterday's candle. Just make sure that that level has already been tapped, so I'm not going to use that one. Let me just switch on my point of controls over here. This one has now been tapped today, so I'm going to delete that one. And that's basically what we have, legends. That is basically what we have. Yeah, that one can't be used. And right, we don't have any point of controls. We are running out of point of controls, but we do have 2 daily levels. Just want to make sure that I have my weekly level still marked out. Yes, we have the weekly point of control above. We still have that untapped weekly point of control at $75,800. And late or tomorrow morning when I wake up, okay, there might be a weekly level over here. I'm not including this weekly level just as yet because I have to wait for this candle to close. Okay, because it could find a recovery back to the upside and then it's not a weekly level anymore. Okay, so that weekly level is not valid at the moment. But tomorrow morning, if price is still trading here at the bottom somewhere, you'll have a fresh weekly level to include over there so that if price finds momentum to the upside, that does become a shorting opportunity. Right, cool, legends. Those are basically the levels. Let's go back here onto the 1 hour time frame. Okay, now what I want to do is switch off the levels, clean up the kitchen, as I like to say. Just want to drag these things all together so that I have them together. Okay, next thing I want to look at is my Elliot wave theory on my local structure. And I must say, legends, there was a chance to find a little bit of higher momentum. But, okay, I want to change the structure. I do not think that it's a complex WXY. I actually think the structure is a lot more simpler than I anticipated. So I want to take all of these things out the way. I want to clean it up. Okay, I want to clean up these structures over here. It really just looks like, and this is the count that I had initially, legends, it really looks like a simple ABC and a W, an ABC and an X, and this, right, was an ABC in a Y, and it did hit a common target. I'll show you guys now. Just want to get my ABC structure, yeah? Okay, A, B, C, which could be done, which means that this 3-wave corrective structure, there's a chance that it could be done in a simple ABC zigzag. Okay, it's done. Or flat. The B claimed the low, the C claimed the high. So it's a flat. It's an ABC flat in a Y wave that is now potentially going to find momentum to the downside. But I mean, we need to pay attention to the upside as well, and we need to have our levels marked out. It currently looks like it wants to get a bounce here back to the upside. Okay, let's see. More berry CVD building up. I don't like to trade against weakness. Okay. Right, legends, that looks like it, because now, okay, when I just want to change the structure of this to minute. No, let's make it even smaller. No, we need to make it micro. There we go. I want to switch on the lines. Okay. The reason this structure could potentially be finished is because when I take a trend-based fib from the low of W to the high of W to the low of X and I drag it across, we did hit a minimum Y wave target, which is the 0.618. This, okay, is a Y wave target. We did tap a Y wave target. Okay. Most commonly, it's the 121 extension and the 1.236. Right? But the 0.618 is a Y wave target. So there's a chance that the high could potentially be in. Right. So now what I want to do, I can switch this off. I'm going to put that in the folder. And switch that off. Right, also want to put that in the folder so that it's all nicely packed together. Remember to smash up that like, legends. Let's go and do some more analysis. The next thing I want to do is take a fib from the low to the high of the structure. Okay, it would be strange that if this is the high of the structure, to get a bounce over here that just moves up without tapping a proper Fibonacci level. Okay, the most amount of liquidity to the downside is below this pivot. That is the highest probable bouncing area. If we are still going to potentially move to the upside, this is the zone that I want to pay attention to. Between the 0.618 and the 786. Okay, and we do have that pivot as well. So this zone, this line, this pivot, and the 786 is where I will be paying attention. Because I'm aware of this liquidity pool here. Okay, do you guys see this liquidity pool? Okay, if price is going to continue momentum to the downside, you usually get a reaction when you hit liquidity. I want to show everyone something over here. I'm not sure if you're going to get good examples, but let's see. Just wait for this to load up. Okay. Do. I want to see if it saved that liquidity. Okay. Right, this thing is still a little bit laggy. We are still testing it out. Okay, it takes a while to load up properly, but I mean, it's not giving me the example that I wanted to show everyone at the moment. But what I wanted to point out, we're going to just have to use a little bit of imagination. There was a lot of liquidity over here. Okay. Price dipped into the liquidity. It had a nice little high yellow volume node. It's just struggling to load up now at the moment. We dipped into the liquidity and we got the reaction. There was liquidity here at the bottom. You dip into the liquidity, you get upwards momentum. There was a lot of liquidity down there. You dip into the liquidity, you get a jump to the upside. So what I'm trying to demonstrate over here is that when you grab pools of liquidity to the up and to the downside, you usually get a reaction out of that zone. Okay, so if price, I mean, it's just slightly above this low over here, okay? Slightly above that low, which is at $80,400. $80,400. Okay, then what we need to do is take a fib from this low to the high. Because now the question is, are we going to get the bounce before we claim the low? That is now the question. Because if it's going to tap the 0.88, because that liquidity pool lies over here. So there's a chance, okay, you often get a bounce at the 0.88, but it does increase the probabilities of taking the low. So if price falls down here, in this little local structure, the first area that I will pay attention to is that order block. I always look to the left to find those consolidation areas. So this 0.618, together with this order block and those lows over there, okay, we also have a liquidity pool if I'm not mistaken. Let's zoom into this structure. Just want to see, I did see a little bit of liquidity. It does jump around, okay, but below this low, there's a little bit of a liquidity pool. So I'm definitely going to pay attention to this little area over there. Sometimes the liquidity loads up nicely, sometimes it doesn't. We're still fixing and debugging this little chart over here. Okay, there we go. Now I can see the liquidity. Can you guys see over here? Right, there's a liquidity pool ever so slightly below this consolidation area. Okay, and I know this is very close. This is very close. But what could happen, okay, remember, if you're going to continue momentum to the downside, I can take advantage of these small little moves. Okay, let's go on to the 15-minute time frame. It's going to look way better. Okay, so if I look at this structure here on the 15-minute time frame, let me just drag this closer so we can see the levels. Okay, this is the zone. You can see, you know, you have a pivot, you have a 0.5. Look at the reaction that you're getting. Okay, these levels do give you a reaction, and it does enable you to get in with good risk management and protect your position. The next longing opportunity that I will be looking at is this consolidation area together with the 0.618, but I wanted to claim the lows because the liquidity pool is below the lows. Okay, so if I see this and price starts retracing back to the upside, I know where to put my stop loss and I know where to enter. So I will be looking at this zone for potential long. Now you have to remember, you now are creating resistance to the upside. And because I know that there's a slightly higher chance for momentum to continue to the downside, when you playing along, you need to be aggressive with profits. When you hit resistance, you take profits, okay, because it could come back down to that 0.88 where we have that massive liquidity pool right over here. And this is the next pivot that I'm going to be paying attention to. Okay, because there's a massive liquidity pool there, legends, below this little pivot and the 0.88. Okay, there's a massive liquidity pool. So it could look like you are coming for the low. Okay, you're gunning for that low, and it gets the bounce at the 0.88 and it comes back to the resistance area. Okay, we got the bounce 0.88 and then it goes and claims the low, and I want to take advantage of that move. Right, so the 0.618 for me, small little trading opportunity. Okay, I might not even play it because this one looks way better at the 0.88. Yes, I mean, can it tap the 786? It would be a bit strange because the 786 is at $81,000. The liquidity pool is below that area. Okay, so legends, this is just how you align up the levels to make sure that the bouncing areas are at, you know, areas of high confluence where you're almost guaranteed to get the bounce, right? So, you know, there is always that chance that you get the bounce at the 786. Maybe you claim that little SFP, you do not tap the 0.88. Then there's a chance, okay, there's a chance if you bounce on the 786 without tapping the 0.88, there's always a chance that you could potentially go and claim the high, because this is considered a bullish bounce. If it taps the 0.88, you increase the probabilities of taking the low. Okay, this is just how I'm building up my trading plan, legends. And okay, and I set my alarms and I pay attention when my alarms go off. Right, the price scale is not visible. Oh, you mean, yeah, on this thing? Yes, it's not visible. I need to fix this, legends. I know, sorry. I know it's not visible, but I am giving you guys the numbers, okay? This liquidity pool is at $80,400. $80,400, okay? So I'm lining it up here with a charge. $80,400 is literally just below the 0.88. Okay. Cool. Now, I mean, from a WXY perspective, okay, WXY, you could be finding more momentum. So all we're trying to do, legends, is that we're trying to play the bounces along the way. If this is the end, there's a high chance of coming to claim this low. Okay, but I can still trade inside of this structure. I don't have to wait for price to claim the low before I enter a trade. I can trade these bounces along the way. Even if the probabilities are now high to come and claim this low, I can take advantage of longing opportunities, and then there's potentially shorting opportunities as well. Because remember, if you have a TP area for your long position, that usually presents a shorting opportunity as well. Okay, cool. Right, now there's also, if you look at the bigger structure, okay, so we've now analyzed the little scalping opportunities inside of this structure, taking it from the low to the high. The liquidity pool is going to tap that 0.88. So if I look at the larger structure here to the upside, okay, the best bouncing area looks to be like the 0.618. Okay, so you could ignore whatever happens over here because, you know, everything moves in waves. Everything moves in waves. And maybe this is where it finds the consolidation and it gets a bigger bounce to the upside where it finds resistance. Okay, it's lost the weekend price action. It comes back, it retests this area as resistance, and then it falls down. So this could potentially be a larger trade to the upside. Bigger profits, okay, still with good risk management. I do like that pivot. And this one over here, I will treat this pivot as a swing failure pattern. Right, it is in the golden zone, and then obviously what I would like to see is some bullish CVD building up against that pivot. Let me do some, I'm going to do some lines over here. Oh, I do like that pivot. Okay. I really like this pivot. But I mean, there's your box. Okay. Let's make it green. Let's clone it. Okay. There's your another one. I mean, legends, yes, you could definitely get the bounce at this box, right? It would be nice to actually do this. Okay, it would be nice to do that. Right, I wouldn't mind getting stopped out of this trade to get this one because this one could provide a bigger bounce to the upside. And then, obviously, legends, it's the 786 that needs to hold together with this pivot. Okay, the 786... Okay, if you get a swing failure from this pivot and it taps the 786, you want this zone to hold because if you tap the 0.88, you increase the probabilities of taking the low, but it does look like the structure has the potential to come and claim the low. Okay, and I'm just willing, I just want to take advantage of these little bounces here to the upside. Let me go through some comments while I think about this structure. Side of the screen is cut off a bit. Yes, I know. I need to go and fix that. Okay, I can't fix it right now. Okay, sorry about that. I will go and fix it for the next live stream. At least you guys can see the Bitcoin price action and levels marked out. Okay, the price scale is not visible. I know. 786 daily. Okay, you're right. That's where we now need to get to, Mr. Parabolic. Right, let's now go and include the daily levels. Let's see if it lines up. Weekly levels, point of controls. Now we can see, well, do we have some confluence? Ooh, okay. That little pivot. Okay, so if you take a FIB retracement from this low to the high, remember these areas that we've spoken about, you do have a daily level at the 786. When you take a FIB from this pivot to the high. It is basically going to front run that liquidity pool, but I have often seen price action front run a liquidity pool where it gets a bounce, it finds resistance, okay, you can take advantage of that little trade and then it continues to the downside. Definitely a possibility to get the bounce at the 786. So, you know, it's just another level with an alarm to pay attention. How's it going to react? It would be nice to actually claim that pivot over there. I do like these pivots to be claimed because I know that that's where the stop losses are, right? But we've spoken about this trading setup over here for potential bounce. What else do we have? And then a little bit further down. Yes. A little bit further down. Okay, I would actually like that daily level to be tapped. Okay, you can use this pivot to see strength back to the upside. If we tap this daily level together with the 786, if price continues here to the downside, it gets acceptance back above this pivot. This could be a nice little retracement until you hit resistance, TP1, okay? It could be even be TP2, and then it falls back down where the price is basically rolling over. So, legends, that is what it is at the end of the day. It's about identifying areas of confluence to take those longing trades back to the upside, get in, get out, take your profits, look for the next trading scenario. Obviously, legends, I don't know how crazy things are going to get, because usually on a Sunday evening while I'm sleeping, I wake up the next day, okay? You wake up to this, right? And you know, we just need to make sure that we have these levels marked out. The most important level to the downside is the weekly point of control at $75,893. And it's basically a swing failure pattern from the low. Okay, this is definitely an area that I have been talking about for weeks now, that could potentially get the bounce if we do claim the low. The structure does look weak at the moment. This does not look like an impulsive structure. It really looks like a three-wave structure, which could potentially be done. It has tapped the 0.618 in a WXY. It has tapped the 0.618. There is a chance that the three-wave structure could be done. Okay, I just want to zoom out a little bit here onto the 1 hour time frame. Let's take some of these levels out. Okay, let's clean up the kitchen quickly and switch on this scenario. Where is this? Okay, I want to switch on this scenario. Right. This fourth wave, okay, could be done in a three-wave structure. Could. 1, 2, 3. 4-wave corrective structure. And now we could potentially be starting to go down for the fifth wave here to the downside. Okay, we could potentially now be busy with the fifth wave to go and complete the C. Okay, right, so this structure is still valid and has not been invalidated, where we have formed a 1, 2, 3. This could be the end of 4. Could. I would have liked to see the rejection at one of these two levels. Okay. And this could be 1, 2, and it's building up a 3-wave here to the downside. 4, 5, okay, ABC, and it can continue here in a 5-wave structure. And basically you have a 5, 3, 5-wave structure to go and complete the 5-wave in a C-wave to the downside. And basically you wanted to find support there where we have that weekly point of control, even a little bit further down. Where is my weekly levels again? There we go, right? This is why I'm keeping an eye on this weekly point of control. If price continues to slice here to the downside and it claims this low, I want to see where this fifth wave is going to find support. It is normal, and I'm not sure if I spoke about this last week, it is normal for the fifth wave to break the structure to the downside. It is allowed to extend to the downside. It does not have to tap the level and do this. Yes, it can happen, but I have seen fifth waves do this. It scares a crap out of everyone, and then it gets acceptance back above, where you have an extended fifth wave here that breaks the structure. It looks like it just wants to crash to the downside, and it's still a valid structure in a 1, 2, 3, 4, 5 extended fifth wave. It gets acceptance back above, and then you find continuation back to the upside. Okay, so first area of confluence is this weekly point of control. Okay, we do still have some more daily levels and point of controls a little bit further to the downside. I mean, you guys can see, okay, there's still a lot of levels to the downside where I can pay attention if it gets really nasty to the downside. We still have lots of daily levels, lots of weekly levels, right? And but the main level that I'm paying attention to is the weekly level. Weekly point of control are usually the strongest levels. Okay, so if this is building impulses here to the downside, okay, this is the zone. Even if you get an extended fifth wave here to the downside and it starts getting acceptance back above the point of control, okay, that could be a swing trade back to the upside that has the chance to come and eat up all of these highs here to the upside. This could definitely turn into a swing trade. Definitely, it has a chance to turn into a swing trade. There's a massive liquidity pool over here. And now the question is, is the fourth wave finished? Right, legends, let me go through some more comments. Point of control. Okay, Dewald, I have a question about weeks. If I deposit 2K, yeah, into features account and I get 1K, so I can use the 3K, yes, to trade. If I make profits, withdraw. But if I lose from the capital or 1K. If you lose, if you lose the money, you lose it from the futures bonus. Okay. So you can use the money towards fees or losses or profits. Hopefully you make some profits, right? And you can keep the profits. Right. Hope I've answered your question. Dewald, okay. HGS, if you are depositing 2K, you can do your own deal with the exchanges. How many waves are in C waves? 5. C waves always have 5 wave structures, and they always, or there is correction also included. Yes, a C wave. So in an ABC, your C wave always has 5 wave structures. Okay, a wave can be a 3-wave structure or a 5-wave structure. So a simple example would be you have 1, 2, 3, 4, 5 in an A wave, and then you could have, okay, the B waves gets really complicated as well, but let's keep it simple. You could have an A, B, C in a B wave. Okay, let me just put it there, and then you have a 5-wave structure in it. Always, it has to be a 5-wave. 1, 2, 3, 4, 5. Has to be a 5-wave structure. Okay. C waves are always 5-wave structures, but they can also be a contracting diagonal. Okay. They can be a contracting diagonal. Sometimes they are even expanding, never preferred, a lot more rare. So, and this is now what we're having here to the downside. So if I zoom into the structure, you can see that we have, okay, a wave in a 3-wave structure. We have a B wave in a 3-wave structure, A, B, C, or A, B, C, 3-wave structure. And now the C wave is ending in a 5-wave structure in a contracting diagonal. 1, 2, 3, 4, 5. Okay, but there is still a chance, legends. Okay, the market is here to surprise us. There is still a chance that the 4th wave can continue to the upside. Okay, because all I will do is just move the line. As long as it stays contracting, it's still valid. Okay, so I hope I've answered your question. But there's also a chance that the 4th wave could be completed. Okay, because we still have that other little structure that we need to contend with. Okay, I can take these ones out the way. Also, what I can show you, Peros, what I can also show you is look at this local structure. If I go here onto the 15-minute time frame and we look at this little structure that is formed over here. Okay, let me switch this off and we look at the local WXY. This little structure, you can see that your A wave has a 5-wave. It's very choppy. You're going to have to go into the 1 minute 30-second time frame to go and count the structures inside of the A wave, but it can be counted as a 3-wave structure, or it can be counted as 1 2 1 2 3 4 5 4 5, and then it comes to an end. So it does carry merit for an A wave. Your B wave is an A, B, C to the downside. I can clearly see it because you can see that your B wave has 3 waves, 1, 2, 3. A, B, 3 waves in B, and 5 wave in C, which completes your B. So your B is a 1, 2, 3. Three-wave structure. And then your C here to the upside is a 1, 2, 3, 4, 5. I mean, very choppy, legends. I'm not going to go, they can get very complex and complicated. I don't like to go onto the 1 minute time frame and go and count all the Elliott waves, but it looks like it has the chance to be a C wave. There's multiple waves inside of the structure that could look like it is a C wave that completed the Y to the upside. Okay. It's just, the three-wave structures are often very easier to identify. So inside of this structure, I can clearly see that this, where was it? This is a three-wave. 1, 2, 3 has to be a B. The three waves are usually very easy to identify. When you get this choppiness, okay, and you have to go on to 1 minute, 30 second, 50 second time frame to go and figure out if it's a 3-wave or a 5-wave structure. Okay, it's usually an A wave or a C wave. But when you can clearly see the 3-wave structures, 1, 2, 3, okay, 4, 5, that's a C. 1, 2, 3, 4, 5, that's a C. I can count the 5-wave structure. That's an easy one. Okay. This could be an A wave, very difficult to count. This is a clear B wave to the upside. C wave, 1, 2, 3, 4, 5. You can go and count that on the smaller time frames. Then you have another A. This looks like a clear 3-wave structure over here. 3-wave. So that could be an A, B, C in a B wave, which is a 3-wave structure. This could be a completed C here to the upside. Okay, legends, I'm not going to go and count the Elliott waves on the smaller time frames. I don't like doing it. And there's also a saying in Elliott wave theory that states when you zoom out and you cannot see the structures, it's most likely not the structure that you are thinking about. Okay, you need to zoom out. And if you can count 5 waves, taking a little bit of a further view away from the price action, okay, that makes more sense. Right, cool. Hope I've answered your questions. So, Dewald, can we measure out the FIP targets of the wave C? Yes. You mean this wave C over here, this one, or the bigger one here to the downside? Is that the one that you are referring to, Jack? I'm not sure. The one to the downside or this C wave over here? Because you can measure this one. And this one rejected by the 1.236. A, B, and you have a C wave target. It rejected by the 1.236. But from a WXY perspective, it also rejected at the 0.618. Okay. Right, so legends, on the larger time frames, let's go quickly do that. Okay, if I put back the contracting C move here to the downside, okay, there's a way to measure it. Contracting moves are not always easy. Remember, the rules of Elliott wave theory still stands. Your third wave is not allowed to be the shortest wave. So you have a 1, look at how big the 1 is. You have a 3, which is shorter than the 1. You can see, I don't even have to measure it. You can see it is shorter. So if this is a 5th wave to the downside, it has to be shorter than 3 because 3 is not allowed to be the shortest wave. So if this 5th wave is forming here to the downside, you do not want your 5th wave to be shorter than your 3rd wave because it's already shorter than your 1st wave. So this is how this is then how you measure it. Take your trend-based FIB. Okay, so basically your 5th wave is not allowed to tap the 1-to-1 extension. If your 5th wave taps $69,000, then it means that your 3rd wave is the shortest wave and this is an invalid structure. You have a long 1, you have your 2, you have a shorter 3, now potentially the 4 is in, it can still go a little bit higher, okay? In a more complex sideways corrective structure, it's definitely a possibility that price can maybe go for the liquidity pool above, and we're all waiting for these liquidity pools and it finds momentum to the upside. We have those levels marked out, legends. Okay, we've identified the trading opportunities to the downside, but the trading opportunities to the upside remains the same, like we've discussed last week. Liquidity above these highs, okay, and you know, we can go and do a quick recap on those areas. So the invalidation for the fifth wave will be the 1-to-1 extension. The most common target is the 786, $72,000. Where is that point of control? Okay, it's slightly above. The weekly point of control is slightly above, but it has alignment with the 0.618. Okay, but you could get a fifth wave that does this. Okay, and this could turn into a swing trade. I would still have my stop below the low, even if I miss. You know, you can use this level even as an SFP line. Maybe there's even a point of control that lines up with that level. Yeah, I mean, you do not want price to hit this point of control at the 1-to-1 extension, because you are going to invalidate the structure, and it could be a massive dump here to the downside, not in a contracting C wave. So the 786, 0.618 valid targets. It's also an SFP from the low. And okay, so basically, legends, if this structure is going to remain valid, now that we have measured out the fifth wave target, okay, fifth wave, this fifth wave over here, 786 at $72,000, 566, or there. I do like, okay, looking at the price action over here, I do like this area more because everyone is waiting for $72,000. I see it all over social media. I'm sure you guys are seeing it on social media as well. Everyone is waiting for $72,000. What if you get a little short fifth wave that just continues and it leaves all of these people behind? I can just imagine the limit orders. Oh, we're going to buy at the $72,000 area. And then it gets this beautiful bounce here on the weekly point of control, 0.618. And then it leaves all of these people behind, forcing them to buy in at higher levels. Okay, that could definitely be a scenario that's going to play out. Right, legends, and remember, if you'd like to come and trade Bitcoin here with me, link down in the description. I've got weeks, 50% cash back deposit. The more you trade, the more money gets airdropped into your account. You also qualify for these amazing prizes. Let me switch my face back to, okay, the more you trade, you get AirPods, you get a feature bonus, you get WXT tokens, you get Pepe tokens, and you also stand a chance to win a Rolex and an Apple MacBook. Right, and then I've also got Bluffin, legends. They also have, and I must say, this is maybe slightly for bigger traders, people with larger portfolios. Okay, I do have a slightly larger portfolio inside of Bluffin as well. Okay, where you get up to $5,000 in features bonuses, basically 10% cash back. Whatever money you deposit into Bluffin in your features account, you get 10% cash back. The first 50 users will get a maximum of $5,000 basically, which means you can deposit up to $50,000 and have $5,000 to trade with. Also, if you make some large deposits into these accounts, you will automatically be upgraded to VIP 1 and VIP 2 status and qualify for all the lower fees and benefits that comes with those VIP statuses. Right, so amazing deal here on Bluffin at the moment as well. So links down in the description. It's also your way to support the channel. Okay, cool, legends. Now, I mean, it looks like an absolute mess over here, right? Okay, let's clean up everything. Take the levels here out the way. So the one thing, legends, let's go back here onto the 15-minute time frame. The one thing that I am just paying attention to, legends, is what if we do not go down? What if we continue? What if, you know, we have to acknowledge, even though there's no liquidity here, price is in the middle of nowhere. Let me just put my face back. Price is here in the middle of nowhere. There's liquidity, there's liquidity. It's the biggest liquidity pools to the up and to the downside. It's in the middle. It can still continue up. Okay, so we just need to pay attention. If price continues to the upside, okay, this is the confluence. I zoom into this entire structure. The first levels that I want to mark out is to take my fib extension from the low to this high, because that's the W. This is the X, and you can see that the 1-to-1 extension and the 1.236 has perfect confluence with these massive liquidity pools over here. And these two levels are also Y wave targets. Okay, so we just, guys, we've now spoken about the levels to the downside. It does look like momentum wants to continue. There's selling pressure kicking in. Okay, it looks like the probabilities are higher to continue down. But what if it does find support right over here and it says, haha, we tricked you, we're going up first. And then you reject over here. Because remember, that fourth wave can still extend. Okay, definitely it has a possibility. It still has a lot of breathing room. It can definitely still extend. Right, so the same trading setups to the upside is $87,000, 134, and the 1.236, and I think we also have confluence. When you take a FIP from the high to the low, just drag it across, okay? The 1-to-1 extension is in confluence with the 0.786. This is the zone, okay? This is the zone where you could get a reaction. There's a lot of people watching this zone. Okay, so maybe this is where you're going to get the rejection. There's just so many eyes on this level. And I've often seen that when price comes to a level that everyone is watching, it either front runs it, and we can go and speak about the front running level now. Okay, it either front runs it, which is basically the 786. Okay, that's your front running level. It's the 786 at $85,000. Or it pierces it and it scares the crap out of everyone, because I can just imagine how many limit orders people have placed in this zone. Okay, it pierces through like a hot knife through butter, and then this is the zone that I like more. I really like the zone at $89,000, because on social media there's just so many people watching this area, so many people. Okay, I'm not sure about you guys if you've seen it. Right, Dewald, what do you prefer? Alec, Dewald, what do you prefer? TA on logarithmic or regular? I prefer TA. Well, I do all my trading on, 99% of my trading I do on regular. When I go onto larger time frames, 12-hour, preferably daily, weekly time frames, and the price has moved more than 100% to either the up or to the downside, I use log scale. Okay, it just caters for the percentage moves, and it puts it back into perspective. It's really difficult to do proper, especially Elliot wave theory analysis on a regular scale when price has shot up by 100%, because then it just compresses the price action at the bottom. And then the log scale basically opens up the price action so you can see the pivots clearly as well. Okay, but I do not trade the log scale. I trade the regular scale. Okay. Hope that answered your question. Dewald, where are you pulling your FIPS from? Satoshi? Which FIPS? The one over here is pulled. Okay, I'll show you exactly. This FIB extension where I have the 1-to-1 extension. Okay, this one. Okay, this one is pulled as follow. I've used a structure which is called a WXY. So you have an A, B, C in W. So I'm using that pivot. The highest pivot there, that's the pivot that I'm using. Okay, so it is basically click at the low, click at the high, and click at the low. So it's a W. Wait, let me draw. I'm confusing myself over here. Let me do it again. Right. Yes, click at the, there's the dots. Can you guys see the dots? Click at the bottom, click at the high, click at the low. So it is a WX, okay, which, oh, sorry guys, this should actually be at this low. Sorry, there's the mistake. There's a mistake. It should be that low. Okay, it is a WX, and this is part of a Y wave, so it's this low over here. But I mean, it's not a big difference, but I mean, it does make sense to get it exactly where it needs to be. Okay, right. So that's basically the FIP pool if you want this one to the upside. It actually aligns a little bit. Well, the 1.236 level lines up better with the 786. But now you have this one-to-one extension, yeah, in the middle of nowhere. Which is better because maybe you can come and eat up all of this liquidity and get the rejection over here without tapping this level. 1-to-1 and the 1.236 using the extended FIP here to the upside, or the extended FIP here to the upside, are definitely valid levels to pay attention to, especially if you've already done the FIP pool and you see that it's already gotten a nice reaction at a level. Okay, this is one way to backtest a FIP pool to see if it's doing what it's supposed to be doing. Okay, so if I take this one out the way, legends, this is usually how I make sure that my FIP pool is correct. So taking a FIP from this low to this high to this low, I got a reaction at the 0.618. So it looks like the FIP pool is giving me the reaction at the levels, which tells me that the FIP pool is potentially valid. If price continues to the upside, let's see how it reacts at the 786. You ideally want a reaction at each level. Okay, so this tells me that this FIP pool is potentially accurate. Also, another thing I want to highlight over here is if this is an A, B, C, it needs to be finished. This can't be a 1, 2, 3, 4, 5. It's just completely out of whack. The C wave needs to be finished over here. Okay, in a B, C. Right, we are getting the reaction. I just want to see what CVD is doing. Are we building up weakness? Let's just refresh this. Yeah, we're still forming berry CVD, okay? Still forming berry CVD. I mean, if price takes the highs, it will invalidate the berry CVD. But I mean, this does not look like a 5-wave structure unless it's an expanding move, which is very rare, never preferred unless all other scenarios fail. So you have 1, 2, 3, 4, 5, A, B, C, and now it's building impulses back to the upside. I don't like it because an expanding move is always rare, never preferred unless all other scenarios fail. So this looks corrective here to the upside. Only time will tell, but it is building up some local bearish CVD. Okay. Right. Dewald, I can see 10 fips on your chart. We want to know from where you're pulling them from. 10 fips on my chart. Right. Well, this fib, let me just undo this. Right, you need to be specific. Which fib pool? Which fib pool are you referring to? Okay, which fib pool? I don't know which one you're referring to. The one that I've just explained, everyone should know where I get this one from. Okay. Now we still have the larger one here to the downside. This is where I measured the 5th wave. Okay, so if you go onto the 1 hour time frame, all I did over here is that I'm trying to figure out that if this is a 1, 2, 3, 4, 5, the 5th wave is not allowed to be larger than your 3rd wave because your 3rd wave is already shorter than your 1st wave. So how you measure that one is you take your fib, okay, from the high of 2 to the low of 3 to the high of 4, because this fib pool will tell you, okay, so the 1-to-1 is now basically the exact same length as this, the exact same length. So I'm measuring how long this wave could be, and it's not allowed. If this is a 5th wave to the downside, it's not allowed to tap the 1-to-1 extension. Okay, so it has to get acceptance here by the 786 and the 0.618. Right, legends, if you want to measure this leg And now you're expeculating on another leg to the downside. You have to take it from the high to the low to the wherever this high is. If price continues, you will drag your FIB up to that little pivot. If it goes higher, you will continuously just drag up your FIB. Right, I'm not sure how else to explain it. Okay. Right, zero positive news. Dewald, if you have time, could you look at Shiba on 12 hours? Seems like breaking trend using D-line strategy. Peroz, you guys want to look at some altcoin requests over here. Absolute degens, absolute degens. I was looking at Doge this morning. You know, obviously with Bitcoin getting the dump to the downside, it's going to drag everything down. Link is also falling here to the downside. Say, I was specifically interested in Say because there was some bullish news around Say where the Trump administration or something also bought a bag of Say. I don't remember the exact amount. So there was some bullish news around Say as well. Shiba. Yes, I have not looked at Shiba in forever. Guys, I don't even really want to look at altcoin requests because I know as soon as I go into an altcoin, the viewers just drop off. People are very interested in Bitcoin at the moment. Okay. So I can have a very, very quick look here at SHIB. Okay, we already have it. Maybe I've already done some technical analysis. Let's go on to the daily time frame. Let's just see where we are. I haven't done technical analysis on this one in a while. Ooh, okay, I mean, I need to clean. Okay, I think the easiest thing for me to do here is to go to delete everything. 7 drawings. Let's just work with a clean chart over here. So, I mean, you're talking about the D-line strategy. So let's go on to the 8 hour. Let's keep it simple over here. Okay. So, I want to see something. I do like the line charts for the D-line strategy. Okay, I do like the line charts. Okay, it's not broken out. It is actually rejecting at the D-line. It's not breaking out. Okay, if I take it here from the top, and I connect it to this pivot over here. Okay, let's see. And now, is that correctly connected? Because, I mean, you need to be sniper about this level. If you go back onto the candles, okay. Now the question is, yes, it's nibbling here at the trend. I agree with you. It's nibbling at the trend, but it's not a breakout just as yet, okay. A breakout is you breaking out. You come back for retest. You continue. This is not a breakout yet. For me, this is where I exercise patience. I want to see multiple candles close outside of this trend. Multiple candles, because you could get this. I'm not convinced just as yet. Guys, I'm just very cautious of altcoins. I'm really cautious of altcoins because if Bitcoin takes a fart here to the downside, it's just going to... Okay. It's just going to fall. You know, you have to be sniper. I think the safest way is to say, well, stuff the line. Let's stuff the line. Let's rather use the bars, the candles, and you put your trend on top of the wicks. Okay. Then it has not broken out. It's actually rejecting. Okay. You can see it's actually rejecting at the trend. It's not breaking out. Right, I want to see, you know, I'm going to exercise patience with the altcoins. I do not mind getting late into a trade with better confirmation. I would rather wait for a breakout and a consolidation outside of the trend before I make a trading decision. That is not good enough for me, especially on a large momentum trend here to the downside. I want to see some confirmation. I want to see this high claimed. I want to see some market structure change. Okay, I'm going to be patient with the altcoins over here, legends, because we know, you know, it's bleeding at the moment. Dominance is still finding upwards momentum. The area that I'm looking at from a dominance perspective is that there's a saying in trading that says if I go here onto the weekly time frame, we had a bearish rejection. This little wick that we left behind, okay, this little wick that we left behind, there's a saying in trading that says usually at least 50% of the wick gets filled. And this is why I'm watching this area. 50%. Let's see, because dominance can still continue here to the upside, and I want to see how dominance is going to react at this zone over here. And 50% is usually the minimum target to go and fill the week at least 50%, and then we could potentially get continuation to the downside. So I don't think it's time just as yet for the altcoins. Okay, I'd rather be late to the party and have a confirmed buy than, right? I don't like this on SHIB. I don't like that a little bit. Okay, there's still, even if you zoom into the volume, look at the volume. Okay, you've had some nice green volume kicking in, but now selling pressure is starting to kick in again. Okay, I don't like that. So, which means that in this entire weekend and in all of this price action, most of the volume is now forming inside of this bearish candle, unless it can snap out and then this turns green. Right, cool, legends. That is basically the levels that I'm watching here at the moment. Remember, if you'd like to come and trade with me, links are down in the description. That is also how you support the channel. I will be live again tomorrow, as always. And have yourselves a beautiful Sunday. And I will see you guys all tomorrow. And until the next one, cheers for now.